Hello, everyone. I'm Meher Walia, and welcome to Finding Finance, the podcast where we delve into the different subfields of finance. This podcast aims to help high schoolers who are contemplating a career in finance understand the different paths in the world of finance and help them find which path interests them the most. Our esteemed guest today is Jim Reitzig. Mr. Reitzig is an executive vice president at the Renco Group and has been with the firm since 2010. Prior to this, he was the senior vice president for the Royal Bank of Scotland. Founded in 1975, the Renco Group is a family-owned private holding company that makes long-term investments in companies across a range of industries. He's a senior member of the single-family office of Mr. Ira Rennert, founder of the Renco Group. Our conversation today will dig deep into family offices and private wealth. I hope you enjoy our conversation with Mr. Reitzig. Mr. Reitzig, thank you for joining us today. It is a pleasure to have you on the show.
Thank you for having me. Appreciate the time.
So let's jump into what your childhood was like. I believe you grew up right here in Long Island.
That's correct. Yeah, so I grew up on the eastern part of Long Island, a small town by the name of Rocky Point, near Port Jefferson. Wonderful community, good school, close-knit community, blue collar. So there was a good gritty element to it, but just a wonderful place to grow up and great people in the town, in the community.
Did you have some specific hobbies as a child? Do you like playing any sports, games?
I did. I was active. My parents were great. I played baseball, hockey, basketball. Baseball particularly was a sport I really enjoyed. Had a lot of good friends, and we had family. So we spent a lot of time with family.
So baseball was one of your favorite sports?
It was, yeah. And, one of the things that I enjoyed about baseball was the statistical element of it. I remember when I was younger getting Bill James's baseball abstract and keeping notes of players and statistics. And, so I was always drawn to the numbers of the game and the player movement, and huge Yankee fan, which was fun in the early 80s. So I think it's a wonderful sport. I still love it to this day, but there's unique elements of the sport that I think carry through life.
As a kid, I used to do the same thing, but with soccer. I used to, see who's playing, how many times they played, their goals, assists, all this throughout the season.
It's
so
neat. It's neat to track.
Yes.
Yeah. It's a way to keep close to the game.
It is. Speaking about statistical elements, you have an impressive resume, having attended undergraduate school at Villanova and majoring in political science. Well, what is political science?
Sure. It's the study of government, political systems, processes, and it's not the area that I started in. I started as a biology major, and I enjoyed biology. I didn't enjoy some of the upper level chemistry classes, but I switched over from bio to political science. It was sophomore year.
Is that what made you switch the chemistry classes?
Yeah, I love biology. Chemistry, not as much. But I was always into politics and growing up, and I remember watching news programs after church on Sunday mornings. I'd get home and watch, programs with my dad. So I was always into politics as well. So it felt like a good transition. I felt like I was a pretty good writer, so I thought I would do well. And ultimately, I planned on attending law school.
So that was your intention going into law?
It was, yeah. And ultimately, circumstances and my unfortunately, when I was in high school, my dad passed away when I was 16. So got to college, and there really weren't funds available to go on to law school. So I had to figure out a different way, and so that was a path that at least right out of undergrad wasn't available. So you pivot and you make it work.
I'm so sorry to hear about that.
Thank you. It was and maybe we'll hit on it later on, but it was a very significant part of a young person's life, and one of the things that I feel like drove me to want to get into business and ultimately get into business and do well for my family. So whether it was law school and doing well via becoming a lawyer, or being successful in other ways, and ultimately that was through business.
Oh, it's great motivation. Just curious, if you had continued on the political science path, what other job opportunities, maybe besides lawyer, would there have been?
That's a good question. I hadn't really focused. I didn't think I'd ever get into politics. So I was really thinking of political science as the vehicle into getting into law school. So that was the primary thought when changing my major. But you're also 18, 19, 20 years old, and you're learning, and you're not really sure what you want to do.
And was there any crossover in financial fields
with my studies?
Yes.
Well, yes and no. I mean, I'd always taken business classes in college. So those were always sort of my electives, which was informative to how I probably should have been, proceeding originally. But there were, so I was taking some business classes, but I was trying to figure it out. You're young and you really don't know what you're interested in. So.
And was there anything in political science that helped you later on in your financial career?
Absolutely, yeah. I think writing. I think I've always taken pride in trying to communicate very succinctly via writing. Critical thinking, I think, is another aspect of that major that's helpful. Human behavior, I think, understanding how people tick, and what makes them take their actions. So there are elements of political science that you can use in all sorts of fields, I think.
So after college, you joined J.P. Morgan in 1996. And as you said, the business classes did help you, did transition you towards finance a bit. Was there anything else besides,
They helped a little bit, but I went in, so I joined actually Chase Manhattan Bank in 96. That became J.P. Morgan Chase a couple of years after with the merger. And what drew me to Chase was they had a world-class training program, and I was in the credit analyst training program. And it was recommended by actually a fellow student's dad who I went to high school with, and he had worked at Chase at the time. And it just seemed to me, okay, so wasn't going to go to law school. How can I get training in a specific field? And this training program at Chase was really renowned on Wall Street. For other banks would send their folks to the training program. It was a 6-month program. You learned finance, accounting, economics. You had credit analysis. There was it was a group of people, and if you didn't do well on exams, you'd get let go. So there was a pressure element to it there. And coming from a non-finance background, I felt like it really prompted a good work ethic right from the beginning, and really I learned a lot, very foundational learning at that point.
So there were still some consequences if you didn't perform your best. You had to really...
Absolutely, yeah. I remember Meher sitting next to a guy who was a Princeton grad, and he didn't pass the accounting module, and he didn't show up. Then he was like, and so it was very stark. And it wasn't the type of program where they overhired and tried to weed out people. It wasn't anything like that, but they still wanted accountability and performance, which made me make sure that I passed the accounting exams, and did what I needed to do.
Well, getting the job done.
Getting the job, exactly.
What were some of the other roles you played there?
So at Chase at the beginning. So I went through the training program, and then I started as you go what's called on the line, where you go as a credit analyst. I was in the middle market lending group, which I'll probably come back to later on in our discussion. And so I was a credit analyst for a couple of years and became a relationship manager, which was really interesting as a young guy, and would work with business owners and figuring out, okay, what kind of loan facility would work well for their company. And then the merger with J.P. Morgan happened. That was a couple of years in, And the Chase middle market lending relationships were very attractive to the investment bankers at JP Morgan. So middle market lenders were the New York Times, Tiffany and Company, Polo Ralph Lauren, like really blue chip names that these investment bankers from JP Morgan now had better access to because the middle market had banked those companies for 30, 40 years. So they were very tight relationships. So what they did within the Chase and the then combined JP Morgan was they created a corporate finance team working with the middle market and the investment bankers. So I was asked to join that team as a junior person, and I got exposure. I was a credit guy, but I got exposure to all of these investment banking products and services. So I worked closely with the M&A team, mergers and acquisitions team, the syndicated finance team, the high yield debt, the private placements teams, all these capital markets groups that were completely new to me. I had really no exposure to them prior to this. So I was in that corporate finance team for a while, and then I had good relationships with the mergers and acquisitions group, and I was asked to join that group after a couple of years. So that was the progression really from the credit analyst commercial banking side to the investment banking side.
And when you reference middle market there, what do you mean exactly by middle
That's a
market?
great question. So middle market is, you'll see different definitions for middle market, but I would generally say companies within a sales or revenue range of, 100 million on the low end to 2 billion on the higher end. Some people define it as 1 to 2 billion, but it's not huge companies, but they're substantive, real strong companies, and especially in this New York area, there's a lot of those types of companies.
So like you said, they had a name for themselves, but they didn't generate more than 2 billion or so.
Some of them graduated from from middle market to large corporates, such as the New York Times or Polo Ralph Lauren, but a lot of them were in that sort of middle-ish range. They weren't really considered small business, whether it's under $1 billion or under 200 million, you would consider that a small business. So these were real, well-established, professionalized firms, but were not quite. They weren't. Maybe they might not have been public. Some of them were. Some middle market companies are, but they were sort of in that middle revenue range.
Oh, so they weren't public yet.
Some of them could have. So New York Times was when we were working with them, and Polo, I believe, was. But the vast majority of the middle market companies were not public.
Oh, so merging with the Chase and JP Morgan merging allowed you opportunities to invest in those companies.
Well, they enabled the banks chose to merge so they would be able to serve each other's clients. You had commercial banking clients that would then have access to the investment banking product suite, and you had investment banking folks that wanted to deal with the commercial banking clients. So specifically back in this time, there was a lot of logic to bringing these types of companies, these banking institutions together.
That makes sense to allow different avenues for different types of investors.
Investors, or for the bank to sell more product, and really and expand, deepen the relationship, and we used the term back then of a share of wallet. So if you were an investment banker or if you were a senior leader at the bank looking at a particular client, you wanted to sell them, debt products. You wanted to sell them M&A products. You wanted to take them public. You wanted that share of their wallet all to come to you, and by having JP Morgan at the time and Chase merge, you then gave all of these investment bankers at JP access to those commercial relationships at Chase.
I see. So you mentioned you had a lot of roles and responsibilities. Was there any one single takeaway you would take from your time at JP Morgan?
That's a great question. I would say personally, just the access and ability to learn. So it was an incredible incredibly terrific training ground. Like I mentioned, I learned credit analysis. I learned various valuation methodologies when I moved over to the investment bank into the M&A group, capital markets, M&A processes, and by and large, it was just a wonderful group of people there that worked hard, that were trying to do the best thing for their clients, to grow the business. So those are some of the things that I took away, just foundational early career experience that was really very valuable.
So in 2010, you joined the Renco Group, where you're now the executive vice president. Let's dive deep into family offices. First, what is the Renco Group?
So Renco is a private family-owned investment holding company. The family owns a diverse portfolio of businesses, including mining assets, automotive parts assets, textile and apparel business, transportation business. So it's a family-owned investment holding company.
What is a family office?
So a family office is a firm that handles the financial affairs of a wealthy individual or a family or multiple families. And we'll probably talk a little bit further about this, but all family offices are different. There are really no two that are the same.
So is it similar to a wealth management fund?
It can be. Oftentimes, family offices, one of their primary roles can be managing a particular family's wealth. Typically, and probably all the time, I would say, family offices are private. Some actually, one in the past, particularly Michael Dell's family office, did delve into the public space before a recent merger of theirs. But family offices predominantly are private, which is different from a wealth management firm, which are typically public and allow multiple investors, whereas family office is either one family or a couple of families.
How many family offices are there in the United States?
That's a great question. It's the family office space is pretty private, so it's probably in the thousands, maybe even tens of thousands. There's a lot of them, but they fly under the radar generally, and most families of significant wealth are private and take privacy very, very seriously. But there are a lot of them, and it's really proliferated over the last 20, 30 years, especially with all the wealth that's been created through technology, whether it's Silicon Valley and the like. But it's a growing field, and it's become more professionalized as well. So you have 30, 40 years ago, you would have a family office, and it was basically an accountant there that was close with the patriarch that or matriarch that made the original wealth, and that person, whether it was an accountant or a lawyer, would sort of grow up with the family and became like a trusted advisor. What you're seeing now is professionals that are running corporations moving over and running family offices and investment holding companies.
So it's very close-knit, building that relationship over time.
Well, I think one of the key points. I met Mr. Rennert and the family when I was a banker at J.P. Morgan. We worked on a transaction that took a long time to get done, and ultimately it was a successful deal. But I got to know him over a couple-year period because you're always in close contact on these type of transactions. It was an M&A deal, and you're in close contact with the principal often. So I got to know them really well, and I think part of their calculus in bringing me in, quote, in-house as part of their firm was because they had seen me operate for a bunch of years and had a high level of trust in what I was able to do.
What's the minimum threshold a client needs to have so they could approach a family office?
In terms of from them basically creating one on their own?
And rather their net worth. Like what net worth would they need to have?
It really varies. I mean, there's guidelines where folks will say, oh, if you don't have less than 50 million or 100 million, you really shouldn't start a family office. I think of it a little bit differently. It's really, what are your goals and objectives? If you're a wealthy family or wealthy individual, what are your goals of that office? Some family offices are simply service models, and sometimes folks pejoratively call that like the dog walking service. Like, they'll have people that work on that, but some family office are on the other end of the spectrum are very complex and handle, they'll have a staff of 100 people and handling investments, governance, philanthropy, all kinds of. So back to your question, what qualifies as a family office? High level of wealth. That's the main piece, but there's really no set range, and they come in all shapes and sizes. I've heard a quote in the past, like, if you've met one family office, that means you've just met one family office, because they're really all very, very different.
So they specialize different things, have different approaches.
Exactly. Yeah. So an example is a bunch of years ago, Morgan Stanley had a dinner of multiple family offices, and they had a congressman there as a guest speaker, and it was like 15 or 20 folks. So I was invited to that, and Michael Bloomberg's family office was there, the head of that, and George Soros's, and all these people. And as they went around the table, it was very enlightening to me to see how different the philosophies of each of these offices were, and these investment holding companies were. And George Soros, the gentleman who spoke, looked for very early stage investments, venture capital type investments, whereas Renco, where I work, we look for established businesses, businesses that are make tangible items and not service based. So very different models, but both of them high degree of success.
Speaking about different types of family offices, what is the difference between a single family office and multi-family offices?
Sure. So single family offices is just serving one family, and multifamily offices are often a collective group. A collective group of multiple families that are served by one office. And you say, okay, why would you create a multifamily office? And it's really to leverage different resources. So, a family office may have a tax group. Well, if it's a single family office, that tax group may be expensive, and a couple of people doing that tax work. Whereas if you can spread the cost of that service over multiple families, it may be a better model for certain families. That may be, back to their goals and objectives. What are they looking for? And that may be a more cost-efficient approach.
So once again, the model all depends on their philosophy, their approach, their goals, their aims, mission.
Exactly. Yeah. What does a family look? Do they want to? Maybe they made their money in tech and they want to diversify their portfolio, and maybe they want to do private deals versus public deals. Who knows? It really goes back to what the family's goals and objectives are.
So what is the difference between public and private deals or offerings?
So I view it as public investments that are available broadly. People own shares in publicly traded businesses on an exchange. So that's how I would define a public investment in a public business.
And what are the different type of investors?
In terms of, are you saying like accredited investors?
Yes.
Okay. Yeah. Everybody can be an investor, right? I remember when I was 12 years old, I had a lawnmower and I bought another lawnmower. So I invested and I tried to hire some of my friends to cut lawns. And so you can be an investor. I think like an accredited investor is someone who's a sophisticated investor who typically has a minimum net worth, that's able to participate in certain, public or private in investments. So that's sort of someone who's an accredited investor who's looking at larger type of opportunities and larger type of checks that they're going to invest in.
It seems that managing a family office is intensive. What does it take to establish one?
Yeah, I think it goes back to a lot of money. You need to have the reason for that. There might be services that particular principals don't want to do anymore. They don't want to do their own taxes, so they outsource that, or they they set up a family office to do that. They may have multiple houses, homes, and they need servicing for that. They may have different investment objectives, and they want to look at venture capital. They want to look at private transactions. So it's I think there's a minimum, I would say, a level of wealth that's needed, and then it goes back to what the family is looking to achieve out of the creation of and the expense of that office.
What about running one or organizing one?
That's a good question. It goes back to, again, what do you want? For our particular investment holding company, the main driver is investment. So we look at a significant amount of opportunities every year. We have very good relationships with a lot of the firms that do sell-side transactions for companies. So our objective is to allocate capital in a very efficient way to buy and own for the long term sizable businesses that are competitive and have a long runway, a long lifespan, and generate returns to the family. So that's our objective. But a lot of these other families have very different objectives.
Well, what does a typical family office team look like?
So there are many different groups within the family office. I would sort of bucket them as folks that handle governance, folks that handle operations or services, like we talked about, folks that handle investments, whether it's public or private, early stage venture capital, late stage public companies, and then there'll be other people that they may handle philanthropy, they may handle all different types of services. So you think of it as a wheel of anything that a family needs can be put under, or wants to accomplish, can be put under a family office.
I see. And I think we touched on this previously, but how have you seen change in your field over the past 15 to 20 years?
Yeah, I would say back to that professionalization, and I've heard that through some folks that I know in the industry, but you've seen, I've had some friends of mine that are, whether they're bankers or attorneys that are sophisticated, have run groups, have managing, a lot of people, have migrated to the family office space and senior leadership roles because they, it's attracting real talent because it's a substantial part of the finance world now, more so than it was 20, 30, 40 years ago.
So it has really, really grown.
It's grown through the wealth creation. I mentioned the technology piece, but just overall, the economic engine that is America has generated a lot of wealthy individuals, and you have this service that needs to service this group that needs to service that wealth.
So I know the world of finance is filled with success stories. Can you tell me about one of your most exciting business deals?
Sure. We had this is going back about 6 or 7 years ago. We had one of the businesses in the portfolio had made an acquisition about 7 or 8 years prior to that, and one of the divisions was sort of I'd call it a somewhat non-core division. And literally, Meher, on the day that we closed that acquisition, I got a call from a industry player who was looking to buy that one particular division, and ended up keeping it and trying to grow it, and it actually ended up being a turnaround situation. So that particular division had been struggling, so we turned it around. The management team at the company did a wonderful job in right-sizing that business. And so we decided to do a market check and see if there were interested investors and interested buyers. And it's not something Renco is a long-term holder of businesses, but and have had companies in the portfolio for 30 years, which is really unheard of, very different from the private equity model. So long-term holders, but I kept getting calls, about this one division that wasn't core and turned around, and we said, okay, let's see, what would be, what the general interest is in that. And ended up pursuing a transaction which was really interesting because it was a carve out. So it was you carving out this part of the business. It was there were shared facilities. So it was a production company, facilities that were still part of it was going to be owned by the legacy company, still in our portfolio, but the other half of the facility had to be carved out and split to the buyer. It was a cross-border transaction. The counterparty was a public company in Europe. It was complex. There were tax implications, and it was incredibly rewarding and exciting because it was complex and it took a long time to get it done. But the thing that I learned most about that from that transaction was just what the family that I work for, the wonderful aspect of their patience, and they had bought this business in 2010, and this one division was performing very poorly, and it required substantive investments in it and support in it through the years, and they saw it all the way to it becoming a very valuable asset, which ultimately was sold. So it was nice. You started with this acquisition in 2010 of this large business, carved out part of it, kept the remainder of it, and that carved out piece returned a lot of capital in a very rewarding transaction. And again, it just was that stick-to-itiveness, that drive to see it through, and the patience to stay with this business and see the future.
So a real turnaround story. And also must have been complex given cross-border, so different regulations based on the different areas. So
absolutely, yeah. You had multiple jurisdictions. So you had to get legal opinions in all of these smaller European countries. You had a very large operation in China that had its own unique complexities. So very rewarding, a lot of fun, a lot of sleepless nights, a lot of late hours, things like that. But ultimately, it was a really nice transaction, and it was a testament to the family's vision for this business.
Seems like a global transaction, to say the least.
Oh, absolutely. Yeah. It was. There were operations in North America, both in the U.S. and Mexico, all throughout Europe, and a very large business in China. There was, I want to say, 6 or 7 facilities in China. Wow. So it was a great deal. Very, very interesting deal.
And how about one business deal that made you learn a life lesson?
Well, that's every business, every transaction, every deal that we do, and really every interaction through working with the portfolio companies, which I do a lot of at Renco. But you always learn, right? Mm-hmm. And I think on that deal, I mentioned patience. Like you learn, if you believe in a business and you're willing to stand by it and invest in it and be patient with the people and the processes, you're going to do, you hopefully do well. But, other life lessons, you'll humility, right? Mm-hmm. Because the business is hard, and it takes a lot of energy and time and intelligence to try to make businesses very profitable. So life lessons learned, humility, patience, things like that you learn every day. They keep getting reinforced every day.
And, on a lighter note, how do you spend your free time now? What are some of your favorite hobbies?
Sure. So children, I have two, as you know, I have two young children, 8 and 6, Caroline and Tommy, who are wonderful and the best. And we spend a lot of time together when I can, certainly on the weekends, full devotion to them. Family, wife is wonderful. Siblings, so very, very family oriented, a lot of time with our family. I'm pretty active. I'm a runner, so I've done a lot of running in the past and try to do things like that. But it's really work and family and faith. So.
Yeah, it's nice. And also your dog Teddy.
And Teddy, exactly. Yeah, you can't forget about Teddy. He won't let you forget. So no, it's I have a nice setup with the dog's great, the family's great. So very, very blessed, very fortunate.
It's very nice, very nice. And retrospectively, would you pursue this career path again? What would you have done differently?
Yeah, so that's it's a good question. I would. It's been a great journey, so I don't really have any real regrets with regard to the business side of it. Maybe I would have figured it out sooner, right? And been a business major, maybe an accounting major. I have a high degree of respect for engineering majors, and working with the companies that we work with. A lot of these senior managers are engineers, and that the discipline in the engineering background is very impressive. And but I'm very happy with the path I took. There's reasons why you make choices and you sort of take circuitous routes, but overall, I wouldn't change a thing. It's been like I said, it's been a great journey.
And a lot of senior managers are engineers, really?
Yeah, so the businesses that Renco owns, whether it's an auto parts production business, a mining business, a chemicals business, a lot of the senior folks and CEOs they have engineering backgrounds, and you can see because they instill processes in these businesses that certainly breed efficiencies and productivity gains and things like that. So that discipline has I think has a real benefit for business.
That's interesting to know. I didn't know that.
Yeah.
So now for the question I ask every guest on my podcast. For kids in high school and college looking to enter the world of finance, what advice would you have for them?
So I would say sort of you probably heard this a bunch of times. The normal advice is work hard, be eager to learn, raise your hand, ask questions. Those are sort of the requisites that the table stakes. Like you need that, I think, to do well. I would say other things that are maybe more relevant now than they were 10 years ago is show up. Get to the office, and learn from the best people, and really keep an eye on those mentor types that you say, okay, that's someone. If you're if you're friends or if you pursue a banking career, say, okay, that person in that office, that senior person who's been around for 15, 20 years, that's the person I want to sort of model after. And in order to do that, you need to be at the office, and it can't be all remote. So that osmosis, that showing up, getting there, taking notes. The other thing I would say is just learning how to connect with people and know what makes them tick and operate. I think you're a great example. You're having these podcasts, which are really informative and very interesting, and you're connecting with people. And I think that's a wonderful thing. These are in person. They're not on the phone, so it's a real connection. So I think connecting with people, understanding what makes them work, what makes them achieve, and I think understanding that will help propel folks through their career.
Well, thank you so much for that very insightful advice. I see you used a little biology word there, osmosis.
There you go, exactly. Paid dividends, right? One in a row. So, yeah, thank you. Thank you for your time.
Oh, thank you for taking us through your career path and diving into family offices. Really appreciate it.
Thank you.
Thank you for listening.